This is the standard presentation that I would give if I was doing a stand-up at an event, or perhaps if I was doing a team meeting in offices with a large group of brokers. And it's a way in which we can make sure that with the unusual times that we have at the moment, it's still possible for us to communicate with you fully and effectively. And it's to talk really about the Kensington difference. And that's not just a difference between Kensington and perhaps some of the other lenders in the market, but it's also to outline the difference Kensington now to the Kensington that we used to be. And we really are a very, very different firm to the one that you may remember. And I think, as you can see from the awards that are on the screen in front of you, that we've come a very long way, and we're justly proud of the changes that we've made. The agenda for this presentation will be to talk about the products that we've got, that will be looking at the particular customer segments and coming up with solutions for you. We'll look specifically at new build, which may be quite relevant to some of the guys that are watching this presentation. We'll go through some of the ways in which we deal with incomes and the way that we're innovating in that area. And then we'll go to a specific section about limited company Buytolet and Buytolet in general. So as far as products are concerned for your customers, you may have seen, and I'm certainly hopeful that you have, that we've got a range out in the market referred to as the Hero Mortgage. This is a product that's specifically designed at helping those people that we consider to be heroes. Those guys that are working in our emergency services, the police, the firefighters, clinicians, nurses and paramedics, armed forces, teachers and lecturers. So it's those guys that are in state sector employed, public sector employed, essential skills, who are providing those kinds of services. And what we are able to do for people in this market is potentially offer a 5 times income. Now, that is an affordability calculation, so obviously it is subject to affordability. And you don't have to have the hero as the bigger wage earner. We just need to have one hero on that application, under the age of 40 at the point of application, and then we're happy to look at doing a 5 times joint income to allow those people to perhaps move into the home that they're really looking forward to moving into, and gives them a little bit more options for what they can do from an affordability perspective for the moment. We're also looking at young professionals. Now, you can see from this list of young professionals, they're all the ones that you would expect to be able to see, but both this group of products and indeed the hero products that you saw earlier, all of our information is based on the fact that we've been trading for 25 years and we've got a lot of statistical information telling us what the incomes are for these particular areas. You'll notice that missing from this particular list perhaps is veterinarians. We can't offer this facility to vets because the way in which veterinary income grows over time isn't as predictable as it is for the ones that you can see in the list in front of you. But what you can see here is that for people that do satisfy this qualified young professional, we can offer a potential up to 6 times income. Again, we're able to offer that on a joint application basis. And we're also, of course, able to say that up to 6 times joint income can be for a circumstance where the young professional isn't necessarily the bigger wage earner. So again, great possibility and great opportunity to perhaps borrow a little bit more money than maybe the high street's willing to do for these guys at the moment. It's a really simple message. It shouldn't be any more difficult for a broker to get a mortgage for a self-employed client than it is for an employed one. Over 52% of our lending is to self-employed individuals. And that's not because self-employed people are necessarily people that have made mistakes in their past. If your memory of what Kensington does is all around the ability to deal with people that perhaps had financial difficulty in the past, it's about the fact that we've got a really flexible approach to what we do. Affordability based on last year's full accounts, for example, up to 90% loan to value, and in fact even our 95% product that's available through a limited distribution through packages would give you that opportunity. But up to 85%, quite happy to lend on a single year's income. So 1 year's trading history for up to 85%, absolutely not a problem. We will take salary and share of net profit for limited company directors as long as they're at least a 50% shareholder. And we're quite happy to work with contractors. We would work on a weekly contract on a 46-week multiple. So that allows us, again, to be able to work with those people that are perhaps struggling to find high street solutions. 0 hours, CIS, all of these self-employed environments are ones where we've now got some expertise. Now, this is another specific product that we recently put into the market, the Eco Cashback. This is specifically designed around those people that perhaps buying something that maybe needs a little bit of work, and they've got their EPC rating as part of that purchase, and they've discovered that there are some opportunities in there to raise the quality of their performance certificate. It's a relatively simple process. As long as within the first 12 months of the ownership of and that mortgage, they've managed to raise their EPC by 10 SAT points. And I can give you further information if you need it on how you would find out how that works. We would, on evidence of that new EPC that's been issued on that property, put a cashback out there at £1,000 in order to help with the clients with the work that they've done in order to improve that energy performance certificate. We think it's a great idea in order to encourage people to be that much more engaged with the environment. As far as new build is concerned, we cover the entire country, so all of the help to buy schemes that are available, we're quite happy to work with. We do the help to buy remortgage, so that's great as long as we can look at partial staircasing or perhaps even full staircasing. We're able to do 5% builders deposits, and we're getting a significant amount of our business in on new build with help to buy because of the flexible approach that we've been able to put into the market. As far as complicated income is concerned, well, complex doesn't have to be complicated. So we can use variable income, commissions, bonuses, overtime, things of that nature. It's going to be down to sustainability and provability on the paperwork that you're able to supply in order to support the application that you're putting in. We'll take second jobs. We're quite happy to look at investment and pension income. We can take child benefit, and we're more than happy to include rental income as income as long as it's evidenced via an SA 302. But perhaps this is the thing that most people think of us as being when it comes to being Kensington and the memory that you have of us. Credit history. We've actually got a relatively narrow scope when it comes to what we will accept, and that's why we're able to be priced in the way that we are. But we do have the ability to look at people with historic CCJs. We do have the ability to look at people that have had issues with defaults. But we will ignore anything that's communications related. We'll ignore utilities defaults up to £100, and we're quite happy to lend to anybody with a DMP as long as they can evidence that they've successfully paid that DMP for the last 12 months. And that's the only limitation there that we've got on that. Buy-to-let is a big subject these days. There's been a huge change in the buy-to-let market over the last few years, most of it driven by the tax changes that this current government and governments running up to this current government have put into the space in order to really professionalise buy-to-let. Now, our buy-to-let product is exactly the same whether somebody is coming to us on a personally owned basis or on a limited company basis. So that actually means that our limited company proposition is extremely competitive. And the old conversation that used to take place between brokers, accountants, and applicants about, well, yes, you could set up an SPV, but the access to products and the cost of those products is much higher than the stuff that you'll get mainstream when you're purchasing just in your own name. That argument is now very, very much gone, in that you now have no tax advantage whatsoever to have properties owned personally, but a significant tax advantage if you're looking to own them within a limited company. And they are remarkably easy things to set up. We've got no minimum income for landlords as long as they are existing owner occupiers. But if we are looking at a first-time buyer, first-time landlord, we can do that, but we do have a minimum income of £40,000 in order to make that work. We're able to do 5 years based on the assessment rate and calculated at pay rate. So that gives you the possibility of borrowing a little bit more money on 5-year deals and actually makes a lot of what we're doing in that space significantly competitive. Well, the summary page contains probably the most important information that I can be talking to you about, because I know when you hand over the responsibility of a case to a lender, the one thing that you want is a service standard that you can rely on. Now, our service levels, this slide was put together about 6 or 7 weeks ago. And at that point, we were working on a 17-day application to offer average. We're now down to 14 days application to offer average. And we have a chief executive who's made it his mission to bring that down to 5. Now, given the kind of stuff that we do, the fact that we are underwriting cases that are generally more complex than high street cases, the fact that we are looking at bank statements. Oh, and by the way, since I've mentioned bank statements, please don't send us bank statements unless we've asked you specifically for statements on that case, because in a lot of circumstances, we don't need the information that's on those statements. Once we've got them, we do have to read their entire content, and that can sometimes send us down rabbit holes that aren't necessarily going to get the speed that you want from the case. So bank statements, only if you're asked to. But otherwise, we are reading pay slips. We are looking at P60s. We are looking at complex buy-to-let portfolios. We are looking at self-employed clients with complex trading histories. We are looking at complicated incomes. And yet, we are now looking at a 14-day working days from application to offer and we're striving towards getting that down to 5. That's a huge part of the Kensington difference, and is generally what I believe the different lender that we are to the lender that we were, and is the lender that you really should be talking to on a regular basis for those clients that aren't quite fitting the high street. Thanks for your time. Hope to see you soon.